Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 24th, 2026, and we're diving into Allison Transmission's latest earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Allison Transmission has just released their fourth quarter and full year 2025 results, and there's a lot to unpack, from record net sales in certain markets to strategic acquisitions.
Revenue and profitability overview. Let's start with the revenue and profitability. Allison Transmission reported net sales of $737 million for the fourth quarter. How does this compare to their previous performance, John?
Well, the net sales did see a decline from $796 million in the same quarter last year. However, the company managed to maintain a strong adjusted EBITDA of $265 million, which is quite impressive given the challenging market conditions.
And what about their net income and earnings per share?
The net income for the quarter was $99 million, with a diluted EPS of $1.10. This is a decrease from the previous year's $175 million net income and 2.1 EPS, primarily due to acquisition-related expenses and impairment losses.
Strategic acquisitions and market expansion. Allison Transmission has been active on the acquisition front. Can you tell us more about their recent strategic moves?
Absolutely. They completed the acquisition of Dana's off-highway business, which is a significant step in expanding their global footprint. This acquisition is expected to enhance their product portfolio and market presence significantly.
How have their different market segments performed?
The defense end market saw a 26% increase in net sales, reaching $267 million for the year. Additionally, the outside North America on-highway market achieved record sales of $507 million, driven by demand in Europe and South America.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. How has Allison Transmission managed their costs?
They've done well in managing costs, with a gross margin increase of 110 basis points to 48% for the quarter. However, SG&A expenses rose to $110 million due to acquisition-related costs.
And looking ahead, what guidance has the company provided for 2026?
For 2026, Allison is projecting consolidated net sales between $5,575 and $5,925 million, with adjusted EBITDA expected to range from $1,365 to $1,515 million. This guidance reflects their confidence in the integration of the Dana acquisition and continued market demand.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.56 for the quarter. How did Allison Transmission's actual performance compare?
The actual EPS came in at $1.18, which is 38 cents below the forecast. This miss is largely attributed to the acquisition-related expenses and impairment losses that impacted their bottom line.
What has been the analyst sentiment following these results?
The sentiment is mixed. While the acquisition is seen as a positive long-term move, the immediate impact on earnings has raised some concerns. However, the company's strong guidance for 2026 has provided some reassurance.
Key takeaways. In summary, Allison Transmission has shown resilience in a challenging year, with strong net sales and strategic acquisitions setting the stage for future growth. John, any final thoughts on their investment prospects?
Allison Transmission is well-positioned for growth, especially with the Dana acquisition. While there are short-term challenges, the long-term outlook remains positive, making it a potentially attractive investment.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Allison Transmission's performance in the comments below.